Hi, my name is Dion Rowe, currency trader and trading coach at trading180.com. Welcome to this week's supply and demand Forex, gold, and S&P fundamental and technical analysis for the week ahead, starting the 9th of November. Hope you're all doing well. And getting straight into the week ahead, and this is from tradingeconomics.com, and it says the ongoing US government shutdown, now the longest in history, is likely to extend the halt in US economic data releases. This will leave the spotlight to private data featuring weekly ADP employment figures and the NFIB Small Business Optimism Index in Europe. Data updates will be headlined by the GDP and labour market insights in the UK, which will join the Eurozone in releasing industrial production. In Asia, investors will turn to China's data dump for industrial production, retail sales, property prices, and credit aggregates. Also, Japan will post its fresh GDP estimates. So, a few things going on this week, which are definitely marking moving events. So, looking at risk sentiment, and obviously, it's important to understand risk sentiment because you want to know whether the market is focused more on safe haven flows or yield return, right? And looking at the VIX 20 is seen as a bit of a line in the sand between risk on and off. The higher risk, the higher the VIX goes, the more volatility and the more, I guess, the more risk off sentiment. And below 20 is seen as more of risk on. So the lower we go, the more risk on. And this week we have had a couple of risk off sentiment events, one being the over valuation or the potential overvaluation. And everyone's talking about the stock market AI bubble. And that is maybe a bit of a concern. But overall, I think maybe the government shutdown as well is kind of contributing to that. But we have had the market, and this is from Bloomberg. It says here stocks get late day boost on shutdown deal hopes. So there is a potential rumor coming that the current government shutdown could potentially end. Let's see if that rumor becomes a fact. But and we saw that on the S&P again late on Friday, where the market has kind of popped up a little bit. But overall, I think we are in the middle of risk on and risk off. Again, it's a scale, not necessarily one or the other. And so there are reasons to kind of have, I guess, a trade idea based on yield return in Forex. That's more to do with divergences in interest rates or convergences in interest rates, interest rate differentials, as well as being a bit cautious, of course, and maybe looking to buy the yen and the Swiss franc for a safe haven play. But overall, my bias is still more risk on. Gold, looking at gold, you can see gold has pretty much been auctioning, ranging since end of August. And I think again this is due to the market really just waiting and seeing if what's going to happen with the dollar and the data, and we'll get into the dollar in a sec. But gold is a bit undecided, and I guess gold investors are a bit undecided in terms of which way to kind of trade gold or move gold and the value of gold. But actually, I say they're undecided. They decided that for now, because it's really just auctioning. It's been price has been accepted as $4,040 has been the expensive end, and the cheaper end of gold has been maybe the 3,886 area. So for now, until new information comes into the market, I think that's probably where we'll stay. And bond yields, which are a reflection of mainly interest rates, for the dollar anyway, for the Fed, bond market thinks that at the moment the Fed are likely, or rates could be a little bit higher in the future, right? So although when we look at the probability of a cut is 68% at the moment, that figure could actually end up going a lot lower depending on the government shutdown. So let's get into actually the dollar. And it says here the ongoing US government shutdown, now in its sixth week, is severely complicating the Federal Reserve's path forward, especially as officials weigh a potential December rate cut, with no official US jobs or inflation data, the market is flying blind. Strategists, for example, at Rabobank's Foley, are delaying forecast revisions due to lack of CFTC positioning data. Despite bearish sentiment, the US dollar remains relatively stable, supported by a lack of clear alternatives and ongoing rate differentials. The Fed's current rate is still among the highest in the G10, which is 3.88%. But without clear data, the December FOMC could end in another finely balanced decision, much like the Bank of England, with Powell again acting as the swing vote. So markets are leaning dovish with that 68% probability of a rate cut, but conviction hinges on whether enough credible labor data emerges before the December the 10th. And if it doesn't, I think that Powell will end up holding rates, which is probably the reason why you're seeing maybe technically the dollar, moving to the upside, because on Wednesday it was seen as a bit of a hawkish cut from the Fed. And again, the data, they don't necessarily, and the Fed don't want to cut if they don't necessarily have to cut. So you're seeing that kind of happen this week, but I'm still more leaning bearish on the dollar. I think that they will eventually cut once they do get the data, but again, timing is everything, right? But my bias is to the downside. So any pullbacks on the dollar, I think, are shorting opportunities, unless, of course, data comes out supporting more rate holds, right? Which would be better labor data and higher inflation. So, but for now, I think the dollar is going to maybe within this, may kind of be contained between this high and this low until we get that government shutdown end. And then we get obviously inflation and jobs data. So again, there's reasons to buy, reasons to probably sell the dollar, but for me, I'm leaning more on still leaning more on a sell bias, because at the end of the day, 68%, pretty much 70% is still good odds of a rate cut at the moment. If you had a coin and you were flipping it, and it was, you had the probability of 70% that it was going to land on heads, you would always bet heads, right? Because eventually you'd win. So it's the same thing with this. It's just a case of, if the market is still pricing in 70% of a cut today, until there's new data. For me, I'm going with the probability of a cut. Looking at the euro, again, nothing really this week in terms of market moving data. From last week, really, it just says inflation is easing, but still above target. President Christine Lagarde said policy is in a good place, meaning the ECB believes its stance is appropriately restrictive to bring inflation sustainably to target. The ECB is waiting for clearer disinflation evidence before cutting rates. Inflation is close to target, but not convincingly stable there yet. Growth is soft, but not collapsing. The ECB is cautious, keeping policy tight enough to anchor inflation expectations while monitoring how trade disruptions and global shifts play out. So it was a bit of a quiet week for the ECB this week, but ultimately, there has been actually a bit of an increase in the probability of a cut, I think, but not really at the next meeting. I think it's more to do with over the next year. There's probably going to be maybe one cut in there, but it depends again on data. But for now, the ECB are on hold, and again, they got a higher probability of a hold than a cut. So for me, the euro is still a buy when we look at the euro equally weighted index. So again, that pullback on the euro late last week and early this week was again another buying opportunity for anyone who wants to be a buyer of the euro, making highs. If you're looking to continue buying the euro, I'm not really a buyer of anything at highs. I have to probably wait for a bit more of a pullback before reloading on those on that euro buy overall. So that's where I am with the euro. Looking at the Japanese yen. The Japanese yen is a bit of a tricky one in terms of they have issues from a monetary policy perspective, clashing with their government, right, and their new government and a potential government coalition. So it says here, Japan's economic policy is facing a delicate balancing act as the Bank of Japan considers a possible interest rate hike, while the new ruling coalition urges private sector investment and fiscal expansion. Fujita, who is the co-leader of Japan Innovation Party, Ishin, now a key coalition figure, warned that a rate hike could contradict the government's push for investment. So you've got, the government fiscal policies, and you've got monetary policies, which is the central bank's policies, and they're both basically at opposite ends of the spectrum at the moment. Fujita acknowledges that mixed policy messaging, growth versus rate hikes, risks worsening yen weakness. And so a key challenge is to promote growth without undermining currency confidence. So to kind of break that down, I guess in the most simplest terms, is that if you're a government and you're looking for growth, you're going to be looking for not only government spending, potential tax cuts, but you don't really want the central bank to hike rates if you're trying to promote growth, because by hiking interest rates, you're hiking borrowing and lending costs. And if you're hiking, you're raising borrowing and lending costs for, businesses and consumers and, mortgage owners, then, that makes it difficult for them, right? It makes it difficult for businesses to expand. And you really want cheaper money if you're, or low interest rates if you're looking to stimulate growth. So the government policies, they don't really want the central bank to hike rates, but at the same time you've got rising inflation, and a central bank, the Bank of Japan, have a mandate to get inflation down to their 2% target. So there's a lot of uncertainty, right? The Bank of Japan really have to hike rates to get inflation back down to their 2% target. They can't just stay on hold forever. So and if they're mandated, it's something that they have to do. Then ultimately what happens, right? And that confusion, that uncertainty, is what is causing the yen to remain on the weaker side. So it says here, the Bank of Japan is under pressure to be patient. A December hike is delayed if the government's fiscal package sends the wrong pro-growth message. So the yen, and ultimately, I think that we look at the yen index. I think if you're looking for buy, you can look for buys or sells on the Japanese yen. I think there are reasons to buy um, because of the potential for rate hikes from the Bank of Japan. But again, I think there could be sells based on the government's fiscal policies that may delay rate hikes. So I think any further pullbacks into this zone, I think are decent selling opportunities. Or you actually can look for a sell now if you wanted to. But ultimately, I think the yen is a little bit of a trickier one. It's a bit more uncertain on that one, not necessarily a clear direction, but there are reasons to buy or sell on the yen, depending on whether you think it's expensive or cheap. And looking at the British pound and the British pound, I have a sell bias, and many of you who've been following me for on YouTube for a while now have seen that I maintain that sell bias for a while. And it says here, there was last week the Bank of England's latest decision to hold interest rates at 4%, but with a tight 5-4 vote split, strongly signals a likely rate cut in December. Bailey was the swing vote. Governor Andrew Bailey sided with holding rates, but acknowledged inflation risks have moved down, hinting he may support a cut soon. Inflation is seen as falling to 3.1% in early 2026, then stabilizing around the 2% target from the second quarter of 2027. Employment is expected to peak at 5.1%, slightly higher than prior forecasts. And rate cut in December is now a real possibility, especially with inflation peaking and a contractionary fiscal budget coming. And so, it was seen as a bit of a dovish hold. Again, on the rate probability of a rate cut is 78% for the Bank of England for December rate cut. And so any pullbacks really on the pound index for me are selling opportunities. A lot of, I did get a question in the group which I kind of posted on YouTube as well, which was a trader who was asking if the why the pound really is moving up, if they it was seen as a bit more of a dovish hold. And my reply was basically, not to worry, right? The money was really made, weeks before, right? So it's for me, I don't necessarily sell at lows. Any pullbacks is probably looking at, the market's probably just taking out a lot of traders who would have sold at lows, the retail traders who sell low and buy high. And any pullbacks should just really be seen as selling opportunities. In the short term, the market is really driven by, from algos to, market making in the short term. But ultimately, any, pullbacks, you should just look for, or just focus on and filter out the noise and just look at the direction. If prices are going higher in the short term, that's fine because it gives you a better opportunity to look for a shorting opportunity. So, I think the pound should be a decent short now, especially as the market is pricing in rate cuts. Therefore, they think that prices should want to go lower, even if prices move up to here. Break through that level of resistance, so maybe move up a bit higher. There's a level of supply here as well. For me, I think that is, either level is going to just be an area to look for short trades, right? So that's where my position is. And so, yeah, as a recap, looking at my bias anyway, I can't tell you what to do, but the dollar, I'm looking at more sells than buys, but I can understand why you would look for buys at cheaper areas and areas of support or demand. The euro is a buy, just waiting for a pullback on that. The yen, very, very mixed. There's reasons to buy, reasons to sell, but a lot of uncertainty at the moment. I can see why you would probably more look for sells at the moment until there's some certainty, and then the pound is more of a sell. So really, the strongest buy at the moment is the euro. So then, when you go into the pairs, you're just looking for reasons to buy your currency and sell the currency that you want, right? So we've made a bit of a demand zone here, and again, talking about this in the group, and I think that this is going to be a nice opportunity to look for a buy trade if we can pull back this week or into the foreseeable future and look for a buy trade, as long as again the fundamentals support that, and the Fed is still looking to cut rates, and the European Central Bank is still looking to hold rates, right? I think that's going to be a nice buy. If not, down at the 14 round number is going to be very nice too. Dollar yen, I think at the moment it's a bit of a harder read. The dollar yen, maybe the dollar may have a bit of an edge, as if the government shutdown continues to linger on. I think the Fed are less likely to cut rates, which would mean you might see a bit more movement to the upside. And there are hedge funds actually betting that the dollar yen could move up to the 160s. And so if that's the case, then I think probably looking at any buys now or deeper pullback before going long should be decent for a buy, but I'm not really looking to trade that pair. Pound dollar, again, I think out of the two at the moment, the pound's probably the weaker of the two. You've got a supply zone right now, which prices have pulled back into, which you can look for a short if you're looking to buy the dollar and sell the pound. But actually, matter of fact, I think that kind of lines up within that area there as well. Yeah, you've got a level of support, and then some resistance there. So nice for a sell. Technically on this pair right now, but again, I'm not really looking to trade this pair. Euro pound, I am out of this trade now. Exited my trade on the Thursday, but I'll get into that a little later when I talk about trade updates. And but for a new trade, I think definitely this is a pair that I am interested in, looking to continue to buy this pair, just waiting for a move. Either I would prefer prices to really kind of come down to this area here, deeper pullback on the euro pound, right? If I can get that, that'd be very, very nice. But if there's a setup here, I don't mind that. If I'm looking at this from a monthly perspective, it's still probably on the high side. I think maybe a bit more on the expensive side. I'd prefer to kind of buy in the red zone, which is below fair value. So yeah, I would rather do that. But we may never get down there, so I'll just have to reassess if prices get down to that demand zone and see if prices will get down there. If not, then just take maybe a small buy up here. Looking at the euro yen, I think at the moment probably the euro has a bit more edge because of the fact that you've got a bit more stability with in the eurozone than you do in Japan. So I think any pullbacks could be decent for a long opportunity. That would be decent, but again, it would totally depend upon um, the government policies and how and who wins in Japan. Will it be the fiscal policies, or will it be will the Bank of Japan be able to force their rate hikes? And then you've got the pound yen, and I think the yen probably has again the advantage, although the again the yen kind of has uh, some problems and issues. I think there's definitely more issues and problems for the UK, especially with that budget. So I think that should be a decent sell if you're looking to buy the yen. It would be definitely against the pound at the moment. So any pullbacks, I think, are actually nice shorting opportunities. Looking at the metals, gold and silver. So gold at the moment, and the same thing with silver, is really going to probably remain within this range until we get some clarity on what's happening with the government data. If rate cuts continue, then you're likely to see prices move to the upside. If the data shows that there's likely to be potential for a hold, you're likely to see the dollar strengthen, and of course gold weaken. Same thing with silver. So I think again silver is going to remain within this auction, right? And at the moment, this is seen as an absolute bargain price to 45.70s, and this is seen as an expensive price to 49.50s. So let's see what happens here. And again, I think this will probably shift out of this price range, this price auction, once we get the government shutdown and data come out. The S&P, again, a bit of an interesting one. There's a couple of narratives driving the markets. One being the um, the AI bubble, potential AI bubble. This is basically just bounced off of this longer term trend line. That's one narrative, and of course, if the Fed look to cut rates or don't cut rates, then of course that should move to the downside. If they end up, data proves that they should cut rates, then we'll probably end up making some new highs at some point and probably hit the 7,000. So again, rate cuts and the AI bubble is definitely going to be driving the S&P for now. So looking at actually trade updates, I didn't take any trades this week, but there is definitely some interesting setups that I've gone over with the guys in the Discord group, and I'll probably be entering into one on the Sunday open or Monday morning. But yeah, I won't get into that. But then basically trade updates. It was all about profit taking this week. So yeah, so basically this was from last week where we ended up getting in on this stop hunt here. Ended up prices moving all the way to the downside and ended up missing, well, not even necessarily missing the profit taking because I didn't really set a profit target, but I ended up taking profit at the 86.50s. So it was around here. So prices ended up, kind of stalling here, pulling back here. And once it pulled back, on that lower time frame. Right, so we got in around at the top around here, and then prices, oh no, it was the 86.50 wasn't there. 86.50 was here. Yeah, 86.50. So that was where ended up getting involved. And yeah, when prices kind of moved to the upside, I thought if prices come back down to around this area here, I'm going to look for some profit taking. So that's basically what happened. So took profit on the final smaller position that I had open on this, so that was nice. And then took profit on the euro pound. So if you go back to around, the October, early October videos, you'll see that I entered into a trade around here. I think it was around there, and then basically took profit up here. So again, only really got into one position, so I ended up taking the majority of profits off at a 1-to-1, and then just basically trailed the stop higher and higher. And so that was actually a really nice trade to the upside. And so decent on that. And yeah, so I'm now flat, no in no trades at the moment, but waiting for a really nice setup, I think, on actually I'll reserve that for next week's video. So take care, guys, all the best, and speak to you all soon.